Hi, everyone. Thank you for joining us at this class during your lunchtime. It's just wonderful. I wish I could see everybody. So my name is Jessica Santana, and I'm a loan officer at HomeStreet Bank. I have been financing homes now for like 27 years or something like that. And now I get my clients' kids come and get approved to buy a home. So it's a really good, nice stage in my life. Anyway, super excited to be here. I'm going to share with you some information about down payment assistance. And we're going to start quickly just looking at what the table contents will be. I know that down payment assistance can be a topic that could embark lots of hours. And so we're going to just touch on the surface, get a real general idea as to what down payment assistance is. And then if you guys have specific questions, or maybe you want help with determining what specific program will fit best for you, I'd be happy to help you after the class. We can schedule some time. All right, so we're going to talk about down payment assistance, and for short, that's DPA. And there are deferred down payment assistance second mortgages. There are grants, and then there are some loans that have shared appreciation, and we'll talk about that. Some have income and geographic restrictions. Some require that you have down payment, some don't. Most of them require that you have an education, so a home buyer class that you have taken. And some of them have limited funding. So maybe you're approved to get X dollar amount from a grant, and then you find a home and that program has run out of money, right? So we want to be mindful of that. I'm not going to talk very briefly about budgeting and how to best prepare for home buying. And we'll share with you some resources, and we'll talk about the Affinity program benefits. So HomeStreet Bank offers University of Washington employees some benefits, and I'm going to briefly touch up on those. Okay? All right, let's go ahead and get started. So what is down payment assistance, DPA? So a quick overview. Let me move the little camera down here so that it does not block the view. There we go, better. So down payment assistance, you've got loans and grants, right? Most of them, I would say like 90% of the loans out there are going to be, it says down payment assistance, but it's a loan. It needs to be repaid. And so if it's a grant, then it means that the money that's been given to you could be forgiven over a period of time and you wouldn't have to repay it. There are not that many grants out there. Most of them are down payment assistance. So you would be borrowing the down payment, in essence, is what you would be doing. And I would say that the biggest misconception out there is that people think they need 20% down payment and a whole bunch of money to purchase a home. And that's not true. There are a lot of different loan programs out there where the minimum down payment is just 3% of the price. And then you could also borrow the down payment. So you could potentially end up purchasing a home with very little money. Okay. So that's what we're going to talk about next. All right. And then also, since this is being recorded, you're going to have access to the PowerPoint presentation after the class. And if you want me to send you something, you can also reach out to me. All right, so as I was saying, some of the DPAs, down payment assistance, some of it is deferred payment. It's a second mortgage. So you've got your price minus your down payment. You have your loan amount, and that's your first mortgage. And then you borrow the down payment, or a DPA, down payment assistance loan. It's a second mortgage, and that can be used towards the down payment and or the closing cost, the cost of financing the home. When you sell the property, they'll add that balance to your payoff, and through the sale, you're going to have that paid off. In most of them, monthly payments are not required. but you do end up making payments. You're paying it off when you sell or refinance, okay? If it's a grant, that's what I was saying earlier. These are loans that do not need to be repaid, and they're forgiven over a period of time for as long as you occupy the property. It's most common that you need to live there for about 5 years before they can be forgiven. Some loan programs have shared appreciation. So as the value of your home goes up and you build this so-called equity, right? When you sell the property, you'll share a portion of your gain with the nonprofit or the organization that helped you to get the financing done. Community land trust is something that is fairly common, and it's not very well known out there. These are nonprofit organizations that fix homes up, and then they put them up on the market for sale at prices that are well below the market price. And so when you sell those properties, and we'll talk more about this, but when you sell those properties, you can only sell to another home buyer who also meets the low to moderate income limits. So on those, definitely lower to moderate income limits is the requirement, okay? All right, so let's talk a little bit about down payment assistance. So I would say that the most popular loan program out there is from the Washington State Housing Finance Commission. And they're located downtown Seattle on 2nd Avenue, and they're a nonprofit organization. And they have all kinds of different down payment assistance programs. You cannot go there and apply there directly to get the down payment assistance. Instead, they approve different banks and lending institutions to be the means for you to access this money. So HomeStreet Bank is one of the lenders that's approved to provide down payment assistance loans. And in most cases, you want to have on these loans a minimum credit score. Loan programs will have minimum requirements. It says here in my PowerPoint that you need at least 660. There have been some recent changes that have lowered that credit score to be around 620, and in some cases, even a little bit lower. So some flexibility there. Programs vary. Just realize that, if the credit scores are below 600, you may want to work on the credit scores first and then take another stab at it and see if now you can get approved. Okay, so the amount of down payment assistance that you can borrow varies. The most popular program out there is called Home Advantage. And on that one, the income limit is $180,000 a year or less. So if you make less than that, you could potentially borrow that down payment piece. The catch on the down payment assistance is basically that the interest rate on your main mortgage, on the first mortgage, is going to be higher. If you borrow the down payment, then it will be, if you don't borrow it and you just bring your own money to the table, right? Like buying a car without some money as a deposit versus buying a car with some deposit, right? You get a lower interest rate. So similar situation here. If it helps you to get your foot in the door though, it could be a very good option for you. So again, the down payment assistance does need to get paid back. So usually this program, and again, the Housing Finance Commission has many, and they have a lot of different income restrictions. Usually less than 180,000, right? Much lower than that. But the most popular is this one that has $180,000 a year limit. So again, the down payment assistance will have to be repaid back. This particular program is at 0% interest, no payments. So that the silent second, there are no payments, no interest, just sits on the side. When you sell your home, both mortgages, whatever remaining balance is on the first and the second, go together and get paid off through the sale if you're selling. And if you're refinancing, they both need to go together into the new loan, okay? So if you sell or refinance, then that loan has to be dealt with. All right, so that's down payment assistance in a nutshell. This gives you a little example. It shows you, let's say the price is $450, you've got a loan amount after 3% down of $436. And then you have, this is your down payment required. And then you borrow, this is that Home Advantage program that I was telling you about. You borrow 4% of the loan amount at 0% interest, no payments. And that helps you to cover not just down payment requirements, but also some of the closing costs, the cost of financing the home, appraisal, title, escrow, credit report, and so on. Okay, so that's a little example for you. Let me see. So there's another program, but it's a grant, right? This is the second type. This one is a program that is available to low to moderate income people. This varies by location, right? And then you can borrow up to $15,000. There's no interest, no payments. Normally after 5 years, this amount of money could be forgiven if you're still living in the home and making payments on time. And that would be a grant, okay? Different income restrictions again. And on this one, it's important to note that funds can run out. And so when you get approved, you just want to be careful, maybe have this as an option, but don't have the approval depend on you getting that money. Because if there are no more funds available when you find a home and make an offer and have it accepted, you might have to scramble and figure out where that money is going to come from, okay? So that's a grant for you. And then a community land trust. There's an organization that we at HomeStreet work with a lot. It's called Homestead Land Trust. They basically refurbish properties, put them in the market at a much lower purchase price. For example, here it says $500,000 home could be sold possibly for $200,000, right? It gets sold to people who have income, household income that's at 80% of the median income or less. And in this case, you need at least 1% of the purchase price for down payment. And then you agree that when you sell the property, you're going to sell it to another home buyer who also meets the income restrictions, right? That way, it's handed off from one person who is able to take advantage of it, have ownership, live in a sense of community. And when you're ready to move on to the next home in your life, then you hand it off to someone else who's also starting, who has lower income households. The other thing on this one is that the appreciation for Homestead Land Trust is limited to 1.5% per year. So you're not going to see the ups and downs that you see in the market out there with home values going up drastically. This is meant to be a home where you move in, you enjoy home ownership, the value and the equity can go up, but it's not going to skyrocket and go up extremely. And so then again, you're going to be selling a property at it goes up steadily. So when you hand that home to someone else to enjoy that home ownership, it's still affordable to them as well. And then here's a little example. So let's say you have a purchase home value and a purchase price of $425,000 on a standard purchase here, right? And then you have your loan amount of $412,000, and you need $12,750 for down payment. This is 3% of the price. Compared to community land trust, where that home that's worth about $425,000 has a leasehold because you're leasing the land to Homestead Land Trust. So they own the land, you own the house. And then you end up with a purchase price of just $275,000, right? So then no down payment, your loan amount is $275,000. And the advantage of that is being able to enjoy a home that's worth much more at a much lower price, which creates a sense of community so that people don't have to live so far away in order to be able to afford a home. So it's a great program. It does have, as I said before, income restrictions. Usually it's 80% of the median income or less. All right. So just keep in mind, down payment assistance is a great option, right? But it does have some restrictions. Some have income restrictions. Some have location restrictions. Some are, like down payment assistance only for homes in Tacoma or only for homes in the east side of Washington and so on. Some require down payment minimum requirements, like that one in Homestead, at least 1% of the price. Some require home buyer education classes. Usually it's a 5-hour home buying class. Some have limited funding, as I explained. Some of them run out. And if that's the case, you want to be mindful of that. The one that has 0% interest, no payments that I told you about from the Housing Finance Commission, that's the most popular. That one does not run out. So again, you don't need to understand every single program. Just make sure you speak with somebody who can help you figure out which one is best for you. All right. And then, of course, you must occupy the property as your primary residence. And in most cases, a non-occupant cosigner, like somebody who's going to help you to qualify for the loan, is usually not allowed. Okay, so just check to see. In some instances, it is allowed, but it's not very common. Okay. So recommendations and next steps. Let's go ahead and figure out, okay, so how do you budget for a home and how should you prepare, right? So I teach a home buying class, by the way. I'm teaching a 5-hour home buying class, which is required for down payment assistance loans. You get a certificate of completion at the end of the class, and it's good for 2 years. My next class will be April 20th, which is a Saturday. It's from 10 a.m. to 3 p.m. It's free. I'll have a real estate agent, an inspector, a home insurance agent, a credit report expert. Anyway, we're going to teach you all about home buying from beginning to end. And it will be downtown Seattle. So if you are interested in that, it's from 10 a.m. to 3 p.m., be sure to reach out to me. All right, so in my class, I always talk about creating a budget. And I think that the best way for you to prepare is to simply look at, okay, how much do I pay for rent? And how am I doing with that? If right now you're paying, let's say, $2,500 per month for rent, but you're not able to save and you feel like you're kind of struggling and it's tight, well, that should point you towards either, okay, maybe I need to work on paying a couple of things off, or maybe your budget plan should be, I can definitely not afford this monthly payment comfortably, and to move forward and purchase a home, it would need to be a lower monthly payment, right? So just have that really clear in your mind. Know what you want and what you need, and differentiate between those priorities. Pick the one that is like not negotiable. Like you must be close to a light rail or whatever that is. That's like a you must have. And then for sure, just have a budget plan, right? Part of a budget involves savings. So how much savings do you need, right? Now we know there's down payment assistance out there. Now we know you've got like 3% down payment is the minimum required for a lot of options, a lot of loans out there. So you don't need tons of money. But in addition to that, you should be mindful of money that you're going to need when you purchase a home, when you move in, and that you should be prepared for maintenance of the home and different costs that will come up once you own the property. There's a term out there in the industry that's called payment shock, right? And I think it's just important for you to prepare for that. Usually when you purchase a home, the monthly payment is a little higher than what you're paying for rent. So sometimes in budgeting, one of the best recommendations I can make for you is to practice making, let's say you think that you can afford $4,000 a month, and right now you're paying $2,500. Well, practice making $4,000 a month payments. Pay your rent for $2,500 and save $1,500. And see if you can do that and how you feel. Give that a try for 6 months or so, right? And I think that's a really good way for you to kind of get your foot in the water. All right, so now that you know, we do offer home buying classes for free, and then classes like the one you're attending right now. One good way for you to get started is to get pre-qualified. And there are two options here. One, I call it do a 30-minute phone consultation where you get pre-qualified, or we pencil out your options, like based on your current income, based on the debts that you have in the monthly payments of those, and based on the amount of money you have in savings, how much of a house could you afford? What would that monthly payment look like? How much money would you need, right? Just have that penciled out so that you know where you stand. You're like, oh my God, Jess, I'm totally ready, let's do this. Then you get pre-approved. You get a pre-approval letter, because when you make an offer on a home, you're going to need that in order to make an offer on a home. All right. We would at that time pull a credit report for you, because now it's going to be a formal pre-approval. Okay. And to get pre-approved, as opposed to just 30 minutes over the phone where we pencil out stuff, and it's called a pre-qualification. With a pre-approval, you'll need paycheck stubs for 30 days consecutive. You'll need your most recent bank statements for checking accounts, savings, any accounts you're going to be using towards the down payment. If it's a 401k account that you're going to tap into or maybe borrow from it, make sure you double check and verify the terms under which you could do that. You'll need 2 monthly statements for those as well. So, people sometimes send me a snapshot of their account. There's usually a tab that says documents, and you can download the statements for that month, so the 2 most recent months. And then you'll need W-2 forms for the past 2 years, so 2023, 2022. And then if you're self-employed, you'll need tax returns for the past 2 years as well, with all schedules, all the pages, all the attachments, okay? So these are the documents that you would need in order to get a loan pre-approval. And you would normally apply online. You go online, submit the application. It comes in this, if you're applying with me, then it comes to my website. And then I pull a credit report, review your income documents, issue a pre-approval letter. It's highly recommended that you start interviewing at that point, interviewing real estate agents, right? Because you want to feel super comfortable working with them. You're going to be working with them very closely and live, right? Because you're out there looking at homes with them. And so if you do not have an agent, we have real estate agents that we'll be happy to introduce you to, who are super experienced. And I basically pair you up with an agent that is very familiar with the area where you want to live and that matches your personality, okay? But if you have a real estate agent, then you can just introduce that agent to us. Okay, so once you have a pre-approval letter, you're going to go make an offer on a home. Once the offer is accepted, then you're going to have an inspection on the home, right? You look at the condition of the home, and if everything is looking super good, you let your loan officer know. Say, hey, Jess, it's totally done. At that point, by the way, is when you can actually lock an interest rate. It's when you have an offer accepted. That way we'll know what the price is and when the closing date is and so on. Okay, so inspection, then you can lock the interest rate, and then we start working on ordering an appraisal so that we know it's a report that says how much the home is worth, and we need to have that. And then once we have that, then we start working on final approval. Underwriting will take a look at your loan. You need to start working on getting a home insurance quote right away. And that's super important because costs for home insurance have really increased in the past year or so. It basically has to do with a lot of natural disasters happening, the fires in California and in Hawaii, and all of those things and factors are pushing the cost of insurance up. So you want to get a home insurance quote as early as you can in the process. And you want to let your loan officer know who that insurance company will be, okay? All right, so then we get, sorry. So you get the offer accepted, you had your home inspection, you let the loan officer know right away, you get a home insurance quote, we order an appraisal, we get title insurance, and once all of that is done, we work on final approval by underwriting, right? And then we start preparing for you to sign final documents at closing. It will be a closing agent or escrow company that will handle the closing for your transaction. And that's when you're going to take the rest of the money that you need for closing. Okay, so it's your down payment, the initial deposit that you make when you make an offer on a home, which is called earnest money. And then the rest of it is at closing when you sign your final paperwork with escrow. After that is done, then the loan will fund and record. Your names will show up in the public records as the owners. It will be official. And then you get the keys. And that's the best part. Okay? So that's how it works. Usually from the moment you get an offer accepted to getting the keys in your hands, it's about 30 days. So just kind of keep that in mind. All right, so then we created a couple of little lists here of resources for you. All of them are just government organizations, nonprofits. One in particular, American Financial Solutions, which is the one you see up here at the very top. I'm trying to get my mouse up here. There we go. So this one right here at the very top. It's a nonprofit organization. They're based out of Bremerton, Washington. They work with people on an income scale, so their fee is based on income. And they help people to fix their credit report and to get their finances back in order. So if you feel like you have a lot of debt and you could use some help organizing and planning and just working with your credit, that's a great organization that we recommend. Other resources are in the next page. And again, you're going to get all of these after the class. Are next. And then the next benefit that I want to talk with you about, it has to do with the Affinity benefit program that HomeStreet Bank offers University of Washington employees. And so cost savings, basically you get a lender credit towards your closing costs, and it's equal to half of 1% of the loan amount. So let's say your loan amount is $500,000. Half of 1% would be $2,500, right? $600,000 would be $3,000, and it's applied towards the closing cost, the cost of financing your home. Then we have real estate agents that we work with. Again, if you have your own agent, that's awesome. You can definitely work with them. But we do have agents who contribute from their commission towards your closing costs as well, up to 1% of the purchase price. It depends on how much they're getting paid. So the seller pays the commission of the agents that bring the buyer to the table and the commission of the agent listing the home for sale. If they get a 3% commission, they'll give you 1% back. If they get a 2.5% commission, they'll give you half of 1% back. And if they get 2% commission, there's no room for them to give you anything because they have to make a living, right? So as long as they make anything in excess of 2%, they can help you and credit you some of that commission so that we help you need less money at closing. That's the main goal. Down payment assistance information, just as you have learned in this class, we're an approved lender to provide that to you. We teach home buying classes, just like this class that you're attending right now, and then the 5-hour home buying class that I will be teaching. I teach it once a month, and the location varies. So actually, the one on Saturday, the 20th, this month is in Bellevue. After that, in May, I will be teaching a class downtown Seattle. So if Seattle is more convenient for you, then that's when it will be. Just reach out to me for dates and information. And then also want to share these benefits that I've shared with you, the lender credit, real estate agent credit, education, extend to your immediate family as well. So mom, dad, brother, sister, cousins, right? So if you want to let them know if somebody is thinking about buying or is interested in taking the class, you could share the information with them. Okay, exclusive access. So to access these Affinity benefits, you want to reach out to us at the Affinity department within HomeStreet. Not just walk into a HomeStreet Bank branch, because they will not know which benefits you're eligible for. So you want to reach out to us, and the way you reach us is either you can reach me via email or phone. You can also go to the HomeStreet Bank website, homestreet.com/UW, and you'll see my information there and information of other loan officers that are in my team that can also work with you. You can also take a look at that QR code, and you use your phone for that. It will provide you with the website and our contact information. All right. And then that concludes it. Let me know if you have any questions at all. That's what I'm here for. And if you want to schedule a 30-minute phone consultation, again, for free, not pulling a credit report or anything like that, just to pencil out some options, be happy to do that for you.